In this educational video, we will talk about trading ranges, how to identify them, how to classify them, and how to monetize them. We will naturally start with the fact that we have an excellent closed Telegram club, Alpha Trading Community. This is community where you receive setups every day with precise entry points, stop losses, and take profit levels. Also, every day we post a trading journal with the most important news that is worth your attention. I also want to remind you, by the way, that our previous educational video was about gaps and how to trade them. It was released before the weekend, and accordingly, gaps formed in the market over the weekend. Here we have Bitcoin on Sunday evening, a gap formed on the CME. A price gap on the futures chart looked like this. Our target was to fill this gap, and to monetize this move, we need to open a long position, a scalp long, toward the fill. And what do we see literally the next day? The price fills this gap. And how much could we take? About 3% of pure movement. This is an excellent target and a great result for a scalp long position. So if you want to learn how to regularly trade such formations every week, make sure to rewatch or watch, if you haven't yet, the previous educational video on this channel. Let's move on to our topic. What is a trading range? It's a section of the market where the price moves between an upper boundary, which acts as a resistance, and a lower boundary, which acts as a support. That's it. It's market area where the price moves between these two boundaries and forms a stable upward or downward trend. For example, we have resistance and we have support between these market areas. The price moves either collect liquidity here, gathering the stop losses of market participants who rush to open their positions, or a large participants build a position here, places their limit orders, and when the price comes to resistance, it needs to rebalance this move. This is what we will talk about today. Our task is not to enter a trade when the price is too expensive. Our task, if we are talking about a long, is to find optimal price levels within this range, join the move, and take maximum profit. Great. Let's immediately move to the chart and look at an example of where we can identify price ranges, trading price ranges, how we can characterize them, identify them, and monetize them. So to identify a price range, we need an important key low. Let's say it's located here, a low after which the structure was updated. Accordingly, after that, the asset made a structural higher high, broke structure in the long direction, and at the moment make a new all-time high. We can identify our price range. Let's look at the chart. To identify a price range, we need to highlight our main low, after which, first of all, the market structure was updated, where there was confirmed break of market structure and a high was updated. As in this case, here we had an all-time high according. This is an important high. Okay, we take and draw the Fibonacci grid from our low to our high, and accordingly we get our trading range. Always, absolutely always, in all markets, all assets strive to fill their optimal price. What does this mean? When you see such an impulse, an asset can never continue moving further in a long direction without a pullback, showing high impulse every time and growing endlessly without corrections. An asset always tries to make a rebalance. What is rebalance? It's a pullback, a short correction into zones of optimal levels. At this stage, the most important optimal level for us is the 0.5 level of our range. This is the middle, the median of our range. The price always tries to rebalance our trading range after an impulse. And here, it takes out the stop losses of participants who joined the long move late. The market maker knocks them out. Here we also have limit orders placed by large participants. These are funds, large banks, and similar institutions. And after the price removes these stops and interacts with and activates the limit orders of large participants, the price calmly and smoothly continues moving further in the long direction, updating our market structure. Let's summarize. The price always strives for imbalance and always seeks to complete an optimal correction. We found that the optimal correction of our range is always the 0.5 level. The price, as you can see, interacted with this level and moved farther upward. Okay, now I will show you the settings. You can pause the video and set them. It's very simple. You only need to leave the values 0, 0.1 and 0.5 to identify the median, the equilibrium of our range. Okay, we have covered that. For a more precise, as accurate as possible, search for an entry point when we have already identified our trading range. How do we enter a position? For this, we need to identify OTE zones. OTE are levels that are located in the discount values of our trading range. I will rewind for a second so it's clearer. That is, here we have premium values in this half of our range where it's unprofitable for us to enter long positions. Here we have the discount values of our trading range. Here are prices at which it's beneficial for us to enter long positions if we are considering this chart and this situation. Accordingly, it's also beneficial for large capital to build positions here. So, let's return to how to identify the ideal entry point to enter a position once we have identified our range. I will also show you another Fibonacci grid, which is called OTE. It helps determine the highest probability levels which are located precisely in the discount values. I remind you that here, in this half below the 0.5 level, we have the discount value. And this Fibonacci grid allows us to identify these levels. These are exactly the levels below 0.5, 0.62, 0.705, and 0.79. And as you can see, the asset price interacted with our equilibrium with surgical precision. You see the 0.5 level. It dropped precisely to this level. It don't consolidate there with the candle body. It specifically left a wick. This was a manipulation right into the OTE zone, to the 0.62 level on the Fibonacci grid. I'm also opening the settings for you. You can pause the video and apply these levels to your Fibonacci grid on your trading queue. These are 0, 0.62, 1, the 0.5 equilibrium level, 0.705, and 0.79. These are three levels that allows us to find the ideal entry point. So we've covered that. Here we enter the position accordingly. Our first target would be the fill of the all-time high and update of our market structure in the long direction. By the way, here it was possible to take 50% of pure movement and accordingly leave it to the all-time high. Okay, let's move on. Let's say we are done with this range and move on to identifying the next move. So what happens next? We need to identify our trading range again. We highlight and look for our low, an important key low, after which an impulse occurred that updated our market structure and set our all-time high. Okay, we again take from our low and draw to our high. And we get a new trading range. You see, this is a new trading range, where the optimal correction is the 0.5 level. We see clear interaction with this 0.5 level. Then we move further into our OTE. What do we see here? Let's zoom in. We see how the price interacted with our equilibrium, with our median, with the average price of the optimal value of this range. And what does it do next? It moves down into our OTE levels. You see it interacted with 0.62, then it interacted with the 0.75 level, and from there received buying volume. These are very relevant levels that most often provide buying volume. Okay, here, using the same logic, we could open a long position from these three levels. First, a higher high, an update of our structure, and then leave part for the position for a lucky move. And I think you will also be pleasantly surprised. At the moment, this is also almost 50% of pure movement, and if taken to all-time high, it is 69% of pure movement. Excellent! Let's look at how this strategy works, for example, on lower time frames. Here, the 4-hour time frame. What do we have here? How can you identify our range on this chart? What do we need first? We need to determine an important low and high. Here's our price range. What do we do next? We stretched our Fibonacci grid to fully identify it. First, we highlight our 0.5 level, see our trading range, see where the median is, the middle of our trading range, and accordingly, this is where we have the optimal correction. Most likely, in at least 99% of cases, the price corrects to the 0.5 level, because it needs to cover at least half of its impulse. We use our Fibonacci grid that defines the OTE zone. Accordingly, we see that after the price interacted with our 0.5 level, it interacted with 0.62 and 0.705, after which it also received buying volume and updated the market structure. Yes, of course, for now this doesn't not look like a confident consolidation and a confident update of the market structure. But nevertheless, the position could have been held here, a local one from the 0.705 level, a bit more than 12% of pure movement, which is also nice. Okay, we've covered that. What comes next? Next, the same situation. Now we have a new trading range with this low and with our new high. Okay, we take and stretch our Fibonacci grid. Accordingly, what do we see? I won't even show it again, just the 0.5 level. This one where we simply look our premium and discount values. We already immediately understand from this OTE grid that the price interacted with the equilibrium, with the median, with the 0.5 level, and almost reached 0.62 here. And it was also possible to take a short position and capture this move, about 8% of pure movement. Great. I hope we figured out. That is, in order to identify a trading range, we also need to know how to identify our structure, how to identify our important lows and our important highs. Accordingly, if we have, as you can see here, for example, a downtrend, then the logic is exactly the same, absolutely the same. Only we draw our Fibonacci grid from top to bottom. We need to determine our important key high and important key low. From top to bottom, we stretch our Fibonacci grid and see that the price rebalances for this range and interacts with the 0.5 level. Next, this will be an important high, this will be an important low. From the important high to our important low, we stretch the grid. Accordingly, the price interacts with the 0.5 level, interacts with the OTE zones, with the 0.62 level, with 0.705, and receives selling volume. As you can see, the strategy works both in the long direction and in the short direction. You can find and take excellent positions. Thank you all for watching. I hope you like our educational videos. They are truly filled with very important information without fluff, without any unnecessary words, only carefully selected highly important information. Thank you for watching and see you in the next videos.